Let's delve into local market news on the day. Mia Kruger, Portfolio Manager at Kruger Internasionaal, joining me at the desk. Thank you so much, Mia. Good as always to have you. Let's start off with the PPC story, because PPC is buying a cement maker in Rwanda. And of course, this is the nation where we're expecting strong demand to come through for housing materials. And of course, they'd benefit from that. So what do you make of this $69.4 million deal?
Well, it's very much in line with the proposed strategy going forward with PPCs. They've mentioned that they are interested in expanding into Africa, and this will, together with their investment in Ethiopia, take them to around 30% of the income coming from Africa in 2015-2016. So it's quite exciting for the company going forward, and together with the expansion they've been doing locally and also improving the quality of their cement, you know, we can expect some good earnings if the market turns and there's a demand for cement coming through for this company. Mm-hmm. They're very strong cash, very cash generative and a strong dividend payer, and that's what we like from PPC. And I mean, over the last couple of days, we've seen that the shares performed very well. It's up nearly 14% over 8 days. So yeah.
And fascinating on a day like this, when they announce such an important, acquisition. The stock, in fact, falling back 24 cents. Yeah. But of course, the context is that 14% rally. The company, Paul Stiver, will be leaving. What are your thoughts on the outlook for PPC without Paul Stiver, and of course, the outlook more importantly for the stock price now?
Well, I think that the outlook for the company as such is positive. It's one of our longest listed companies in South Africa, and it's a company that's adapted to difficult situations throughout the years, and I'm seeing them doing that currently. So I don't think there's anything big to expect to come, with a new CEO. I think that they'll just take it in their stride, but the company's share price has performed quite well, and I think that you should have gotten into the stock when it was trading much lower.
Taking a bet when it was seen as perhaps a little bit more risky. Let's move on to Ellies. Trading update coming through there. They're expecting HEPS up between 90 and 110%. We're only getting those results at the end of January. Now, this, of course, is a small cap stock, but it has performed really, really well, and once again delivering when it comes to market performance today.
Yeah, it has actually been one of the best performing small caps this year. I mean, I think the total return for year to date is just under 200%, which is significant. So this company has performed, as we said, very well. We're expecting the trading update to probably hit the upper side of the range, and Megatron has been the strongest performing division within this business, and we're expecting that would probably be the main driver in their earnings.
Mm-hmm. Let's just move to the resource space right now, and everyone at the desk is coming here and they're saying they like BHP Billiton for 2013. And that being said, BHP Billiton continuing to divest of non-core assets, selling that Browse liquefied natural gas project to PetroChina. Is this a big significant deal for you in the context of the broader scheme of things? Because this is an energy play. It's selling out of that asset to them.
Well, like you mentioned, they've mentioned that they're going to sell their non-core assets. So they've been very strong in oil, and I think that's where they'd rather focus in this area. And it's a solid company with a very good portfolio, something that we happily invest in, and something that we're happy to be in at the moment. And as we've seen with the Fed coming out today with it, further stimulus, you don't fight the Fed. So and we know that resources is going to be the area that's going to perform well, and the market doesn't wait for anyone, as we saw today with Anglos. So I mean, those are the kind of stocks that you should have been buying to put into your Christmas stocking, like we were talking about earlier. Yeah. I mean, you'll be a holder of those companies if the market turns, and we all know what happens if the volumes are thin throughout December and early January. That's usually when either the market prices tick up quite significantly, or you get the good deals in the market. Mm-hmm. So I'd be happy to hold those in my portfolio as I go away.
So Anglo American, I mean, you were talking about Anglo American is up 3.25% today, and it has been a stock that has underperformed. So perhaps on a risk-taking environment, you see that outperformance coming through there. So let's just go through some of those stocks, because we talked about Ellies. Any stock that you could think in the small cap space which might be the Ellies of 2013?
Well, I think if we look at smaller companies, Steph stocks I don't think will perform nearly as well as we've seen coming from Ellies, because it's a much more cyclical company. But just if we look at that company and from where it's come from, if we just add about 3 Rand to the share price where it's trading at the moment, and that's even lower than where we were buying it, or where many people were still buying it earlier, They're very strong cash position. This company, the biggest part of their, or a very big part of their market cap is still in cash. So they're still a strong dividend payer, the strongest of all the construction guys. And we know that that's so cyclical. And if that cyclical or that cyclist starts to run, it usually does very well for investors in their portfolio. So if you're looking longer term and you're looking to get into these companies at the bottom, Steph stocks might be a good pick in that industry for me.
Interesting choice there. Let's just go back to another kind of smaller player in the pharmaceutical space, Life Healthcare, announcing an acting chairman, Mr. Bray. What do you think of that announcement there?
Well, he's very suited for this position, I think. He's been involved, with Brimstone, and they've been owning Life Healthcare and then unbundling it. So he's very familiar with the company as such. I think he's also good in adding value for investors. So that might be a good thing as well for Life Healthcare. Might help a little bit with the investment in India. It hasn't performed as they've wanted it to do. So I know obviously it's a long-term investment for the company, but I think that
there's also a bid on the table for Life Healthcare from India.
So he might be able to add some value there for shareholders while he's there. Let's hope.
Thank you so much for joining us today, Mia Kruger, Portfolio Manager at Kruger International.